28th. The open at September at 11:69. You also need to remind you that that occurs in the afternoon, or at least in the afternoon where we're at in the Central Time Zone of September 27th. And so, you know, quite often you don't get a lot of action in the real early part of the day, but it is possible that that high or low could come on the open, and you know, because of the 24-hour markets that we have today. In any case, whatever we do, we want to make sure that we minimize the risk, and so we need to be a little careful about exactly when we enter that market. And we want to know that if it enters in the middle of the range, you know, we're good to go. Then we can kind of set up our parameters and determine which way we're going to go if the market, you know, goes to that point and gives us that. You could, instead, in this case, you can see the market opened, dipped a little bit down, and then moved up and did hit that sell order, that limit order to sell at 1177. Now, I know this gets tricky, and it's you know, a little bit of theory and hindsight when you look at this type of thing, but because you know how choppy markets can get, and we don't know the market what hits 1177, you sell. How long are you going to stay with that market? How long are you going to put up with it? Maybe it's going to go up a little bit beyond what you want to risk. That will be a factor you will have to determine. And there is a possibility what you could do then is let the market make its little run up above 1177 and then sell as it moves back down if it comes up to this peak. Obviously, we don't know what that peak's going to be, but it drops back down and then sell at 1177. Again, there are various ways to skin a cat. You can do some, you know, kind of conceptualizing here as to how you might want to handle it yourself. In any case, wherever you get in, 1177, if you want to risk, I would say no more than $300 or $400 on the trade, which is like 6 or 8 points above your entry point, you know, to be able to stay in. And sometimes it comes very close. You can see here we had a situation where we got up to roughly the 1182 area or so, so you might have just stayed in. But you want to minimize the risk. If you're out, you're out, and then you can kind of take another step and act. The other possibility is you might want to see that the market moves up and then it starts to slide. You could do kind of what is kind of the oops type of trade where you let it go through the open before you get into a position and you know, let it work its way down. The oops where the market goes up and then realizes it made a mistake and then goes back down through the open and makes a little slide down toward the downside. In this particular case, you know, the market did, you know, perform as we would hope it would. It goes on down, and then at the exit we do have another couple of possibilities here. First of all, one of the possibilities that we have is the limit order to buy after it approaches the predicted low for the day. Remember, the predicted low, we said the buy area for the predicted low was going to be 1159, and if it gets to 1159, you can be out with a nice gain. You have a couple of other possibilities. You can trade for a profit target. You can set that up. You can kind of go with it. And, you know, once the market goes through that point, again, you can let it go on through. You know, keep a stop at some point above the highs there, above that predicted low, and get out on the close. A lot of different ways to get out, you know, after you've gotten into a position and gotten you know, a nice gain. And there are a lot of you know, profit target possibilities. You know, if you do it at 20 points, let's say that's $1,000. You don't get everything, but you pick up a nice piece of change for one short day's work in the market. Now, skipping ahead, just to kind of keep moving here and go through some of the other markets. This is the next day. This is September 29th. You know, the same kind of setup that we had here on September 29th with the you can see we had the Neuro Index in this case at 0. So again, preferably we'd like to be a little bit on the bearish side. We don't have that same type of, you know, support from the predicted difference here, because it is still moving up and still suggesting that there's some strength here. But we still have the predicted exponential moving average, that blue line below the actual, and so that we have some feeling here that we do have indicator support for being on the short side. But again, you know, you take what the market gives you, and maybe it will help you. You know, maybe it will perform as you expect, and maybe it will not. The predicted high at 1172, and the 4 points from that by fading from 4 points from that. 1168 would be your limit sell order, or as I said before, if you want to let it run up and then come back down to that point, that's depends on how you want to trade. The predicted low was at 1131, and so our sell order then, or our buy order rather, limit order to buy would be at 1135. The market does what it's supposed to do. It opens at 1148, right in the middle of that range, and everything looks good. But again, we can't really say everything looks great until we look at how the market performed. How did the price action really flow during the day? Because that's kind of the clue in intraday trading. In this case, we have the E-signal chart again that shows you that intraday action. You can see, as on the previous day where we had the open at 1148, the market tended to fade a little bit, swing down a little bit. Then it started a little rally to the upside, moved up towards that buy point, that limit sell order rather, at the high at 1168, and it hit this, real well. One of the things I should have pointed out a little bit more closely on the previous slide was that if you were trading in the middle of the night, you might have caught it, because that came at roughly 4:45, 5 a.m., something like that. Now, this is one of the caveats, again, with any of the intraday trading with a market like, the E-mini or gold or currencies or any of those. A lot of things happen in the middle of the night. Are you trading then? Can't say what your, what your plan or your pattern is going to be. But sometimes that's when the various indicators are hit. So, you kind of have to look at this as keeping it in mind with what would be your trading day. And in this case, the order to sell at 1168 is reached at the beginning of what we would call the normal trading day, and at least that is for U.S. traders. As I said, you could let the market ride a little higher. You don't know how high it's going to go, but if you're in the market, you want to make sure that if you are in, you minimize the potential for a loss by keeping the stop above that point in case you were wrong. Maybe the market won't respect that line. Maybe it'll move on higher because you don't know. Prices do fall. You do have that nice little move to the downside, and as fate would have it, we get all the way down to the limit buy order at 1135 during the trading day. Again, this is during the trading day for most people, and so that is a better experience unless you want to stay up all night and be an all-night type of a trader. So you can also, potentially could have stayed in and got out on the close, but as you can see, if you got out on the close or if you decided to get in after the market moved back through the open, not a good idea on this particular day, because the market really didn't do much for you in those situations. Now, moving ahead, kind of look at the next couple of days. We have here a couple of days where we, really didn't have the same type of thing. We had September 30th. You can see right here, September 30th, where